Hello to everyone. I welcome you to my video about standard costing and variance analysis. We are looking at paper 10, management decision and control, and we have a review question that is for June 2022 question 3. And this question was all about preparing an operating statement, reconciling budgeted and actual profits. Now, this question about preparing an operating statement, reconciling budgeted and actual profits is a common one. So make sure that you know how to prepare an operating statement, reconciling the budgeted profits and the actual profits, in addition to the calculation of the variances. So I'm going to show you how to come up with that operating statement. Remember, we have two approaches which we can use when it comes to preparing this operating statement. That is the operating statement while using marginal costing and the operating statement while using absorption costing. Let me take you straight to the question. So let's move to question 3 of this question paper. This is June 2022 MDC, that is paper 11. It was paper 11 by then, but of course now, following the new syllabus, now it's paper 10. We move straight to question 3. Question 3. Greenwood's deals in the treatment and processing of wood. GWL is located in Jinja and has a wide range of wood products, including plywood. GWL uses a standard absorption costing system to control costs and maximize profits. The management accountant, Miss Flavia, uses incremental budgeting approach to develop periodical budgets. However, the finance manager advised her to benchmark Victoria Plywood Limited, which uses standard marginal costing system and flexible budgeting approach. Now, below are the extracts from the management accountant's variance analysis report for the year ended 31st December 2021. Now, these are the variances they have given you. So what we have here is the variance analysis report, meaning that variances have already been computed. Now you have a summary of the different variances. We have the sales volume profit variance, the sales price, the direct material price variance, usage, the labor variances, the variable overhead variances. We have the fixed overhead variances as well. So that is your variance analysis report. Of course, whenever you're required to come up with an operating statement, either you will compute the variances yourself, then you come up with the operating statement. Alternatively, the examiner will give you the variance analysis report, just like in this case. Then you will be required to come up with an operating statement, as we are going to do it in this question. GWL planned to produce and sell 500 pieces of plywood at a standard price of shillings 18,000 and a standard cost of shillings 10,800 per piece during the year 2021. The standard variable cost was shillings 10,170 per piece. However, 400 pieces of plywood were produced and sold during the year 2021, and a total profit of shillings 2.898 million was attained. So these are the actual values. They produced 400 pieces and still they sold all the 400 pieces, 400,000 pieces, and they made a profit of 2.898 millions. The budgeted total cost for the year ending 31st December 2022 will increase by 12.5% compared to the actual total cost for the year 2021. What are we required to do? We are required to prepare an operating statement for the year ended 31st December 2021 that reconciles budgeted and actual profits. Then advise GWL management on the budgeted total cost for every year for the year ending 31st December 2022. Then you also discuss how variances are disposed of, and then how benchmarking is used to improve the organizational performance. So I'll start with the first part, the 7 marks. Coming up with an operating statement for the year ended 31st December 2021 that reconciles the budgeted and the actual profits. Now, when it comes to an operating statement in management accounting, of course, it's a regular report for management which compares actual costs and revenues with the budgeted figures and shows variances. But of course, as I've told you, there are several ways in which this operating statement may be presented. Now, the most common format is the one which reconciles the budgeted profit to the actual profit. So you have a variance report up here, a variance analysis report. Now, when it comes to preparing the operating statement, we first report the sales variances. After reporting the sales variances, then we have to show the total budgeted profit. We have to show the total budgeted profits. Then after that, we have to show the standard cost of sales variances. And finally, we have to end up with what we call the actual profit. The actual profit has been given in the question. Now what we have to do is to come up with our operating statement. Then we see if we can get back to our actual profits, which have been given in the question. That is 2.89 millions. So let us come up with our operating statement. So I have an operating statement. Of course, you have to come up with a heading. Operating statement reconciling budgeted and actual profits for standard absorption costing. Remember, this company is using standard absorption costing. So the first thing we do when it comes to reconciling, we report the budgeted net profit first. So the budgeted net profit. But now, how do we arrive at the budgeted net profit? Because it's not given in the question. We have been told the company planned to produce 500,000 pieces of plywood at a standard price of shillings 18,000 and the standard cost of shillings 10,800 per piece. Now, if I have the standard price per piece, I have the standard cost per piece, and I also know the number of pieces to be produced and sold, then I can get my budgeted net profit. Of course, it has not been given to you in the question, and it will not always be given in most of the scenarios. So you have to know how to come up with that budgeted net profit. So we are going to compute our budgeted net profit. I'm going to show you how to come up with that computation. It's an easy one, as we are going to see. So what you'll do, of course, you have your budgeted output. Here I'm trying to come up with the budgeted net profit. We have the budgeted output. Remember, this is the output to be produced and sold. We have 500,000 pieces. So now, if this is what we are planning to produce and sell, I can arrive at my budgeted profit per piece. How do we get the budgeted profit per piece? Now, this is shillings. We have been told that each piece is to be sold at 18,000. But of course, the standard cost per piece is 10,800. This is in the question, please. This is the standard selling price per piece, 18,000. That is per piece. And then the standard cost per piece is 10,800. So 18,000 minus shillings 10,800. My calculator shows 7,200. So now if I have the profit per piece and also the number of pieces they are planning to produce and sell, then we can get our budgeted net profit. That is 500,000 pieces times shillings 7,200, and that gives me 3.6 billions. This is what I'll take to my operating statement as my budgeted net profit. Of course, I have to show that this is from my working. Be working one, and that net profit we have 3.6 billions, but up there I have my level of rounding off is 1,000. Now after showing the budgeted net profit, you have to show the sales variances. You have to show the different sales variances, and as per our question, we have the sales volume profit variance as well as the sales price variances. So you first report those variances. These are the sales variances. So we have the volume profit variance, and that has been given as how much? That is 720,000, but it's adverse. 720,000. I'll put a capital A. Now, when you see a capital A that is adverse, the variance is unfavorable. So it is a negative one, in other words. So when you see a variance with a capital A, then that variance is unfavorable to the company. Then we have the sales price variance, which is a positive, that is favorable, that is 90,000, that is price. So we have the price variance, which is 90,000, but we have seen that it's a favorable one, as you can see, 90,000 and 720. So when I add these two, let's see how much we get. When you add the 720,000 adverse and the 90,000, you come up with 630,000, but it's adverse. So those are your sales variances. Now from the sales variances, of course, you have to show the direct cost variances. Okay, so the direct cost variances, where you look at the materials, the labor. So I'll start with the materials. The materials cost variances. The materials cost variances. Now, under the materials cost variances, of course, we have price. Then you also have usage. How much is the price variance? The price variance is 54,000, but it's adverse 54,000, meaning that the company overspent on materials. Then when it comes to usage, that is 18,000 favorable. 18,000 favorable. When we add these variances, we get how much? When we add the two, our total material cost variance is 36,000. Of course, it's adverse. Then from the materials cost variances, we can also look at labor. These are all direct labor. These are all direct cost variances. Labor. Let us look at the labor variances. This number is a number. If the variances have already been computed and you're just trying to come up with an operating statement, it's an easy one. But of course, you see the max are actually just 7 max. Labor, we have the labor rate, then the labor efficiency. We have the rate. The efficiency. Labor rate variance, that is 72,000 adverse. Coming up with an operating statement, for sure, it's just a copy and paste, only that now the marks are very few. I rather do the computation of the variances where I'm sure that I'll score highly, because when you come up with when you calculate the variances, then you prepare an operating statement, and that may go like around 15 marks, 14, but now it's at just 7 marks. Okay, total, these are all the labor cost variances, that is rate and efficiency. These are all adverse variances. So total is how much? 72 plus 27, that is 99,000, but of course it's adverse. Then from labor, now these are all direct cost variances. Materials and labor, these are direct costs. Let us look at the manufacturing. The manufacturing overhead variances. Okay, the manufacturing overhead variances. Now, under the manufacturing overhead variances, of course, you look at the fixed overhead variances. You can start with the fixed overhead variances. And under the fixed, of course, there is expenditure. Expenditure. How much is our expenditure variance? That is 108,000, but it's favorable. This is 108,000, and it's favorable. Then you have the fixed overhead volume, the volume of variance. The volume of variance. How much is the volume of variance? 63,000 adverse. 63,000 adverse. When we add these two, I add the 2, how much do we get? That's around how much? This minus the adverse. Okay, let me just it's because of the F and the A, I think, but this is 45. This is 45,000, and it's favorable because the fixed overhead expenditure variance is favorable, so we have a net of 45,000. Then we can look at the variable overhead variances, and under here we have, in the question you have what? The variable, you have expenditure and efficiency. So we have the expenditure and the efficiency variance. The expenditure variance, that is 54,000, favorable. Favorable. Then the efficiency is how much? Efficiency, that is 36,000. 36,000. Adverse. If it's 36,000, when you add the 2, this is how much? This is 18,000. 10,000 favorable. So that is your operating statement. By the way, that's your operating statement. Now what you have to do, you can now get your, what? I can get what? Okay, I can say the total cost variances, and add this total cost variances, whereby I'll add all the total cost variances. So meaning that in this case, what I'll do to come up with my total cost variances, this is what I'll do. I will add the direct cost variances, that is materials and price. We have a 36,000, which is adverse. Then labor, it's 99,000, but it's also adverse. Then of course we have the 45,000, which is favorable, and the 18,000, which is favorable. So our total cost variances, we have 72,000. We have a 72,000, and it's adverse, of course. So now, if I have that, now we can see what our actual profit is, because here we are trying to reconcile budgeted and the actual profits here. The actual net profit. Now the actual net profit was given to you in the question, but of course we have to find out and see if it's really what we come up with. So you get your 3.6. We have a 3.6 there up. That is a positive. It's a budgeted net profit. So 3.6. On the 3.6, you have to add the total of the sales variances, but of course the sales variances, the total is negative, that is, so it will be 3.6 minus 630,000, being that it's an adverse variance, minus 630. Then you also minus the total cost variances, since they are adverse, minus 72,000, giving us how much? You get 2,989,000 Yeah, that is our actual net profit. We can check on the question just to confirm, but that's what we have as our actual net profit. Yeah. However, 400,000 pieces of plywood were produced and sold during the year 2021, and the total profit of shillings 2.898 million was attained, and that's what we have as per the operating statement. So those are the 7 marks. The first part covered 7 marks. That's it. Simple. Yep. So that is part A of your question. That is part A of the question. Let us look at part B. Advise GWL management on the budgeted total costs for the year ending 31st December 2022. The budgeted total cost for the year ending 31st December 2022. 7 marks. Okay. So the budgeted total cost for the year ending 31st December 2022 will increase by 12.5% compared to the actual total cost for the year 2021. So this is important, by the way, when it comes to determining the costs of 2022. We should be having the actual cost for the year 2021. Now, if we have the actual cost for the year 2021, I'll just inflate it by 12.5%. Then we get the budgeted total cost for the year ending 31st December 2022. Now the question is, how do we arrive at the actual total cost for the year 2021? How do we arrive at the actual total cost for the year 2021? Actual costs for the year 2021. Okay, so you see, when you look at the operating statement, I have a total cost variance. We're required to come up with a budgeted total cost for the next year, but that cost is going to increase by 12.5% when you compare it to the actual total cost for the year 2021. So all what I need first is to get the actual total cost for the year 2021. Okay, this is part B. We want to arrive at the budgeted total costs for the year 2022. That's what they want us to come up with. Budgeted total costs for the year 2022. I've told you we need first come up with the actual total cost for 2021. But how do we arrive at the actual total cost for 2021? Since I have a cost variance of 72,000, I need to find out what is our standard cost for the actual production. Remember, this company produced 400,000 pieces of plywood. Now, if they are producing 400,000 pieces of plywood, the question is, what is the standard total cost for this actual production? Because if I have the standard total cost for the actual production, and then I also have my variance. Remember, a variance is the difference between the standard and the actual. The difference between the standard and the actual, that is the variance. So meaning that if I have my standard and then I also have the cost variance, then I can arrive at the actual cost for 2021. Okay, so let us see. Standard. The standard total costs of our actual production. For 2021, because we are using 2021 as the base. 2021, we have been told that the company is to produce, sorry, the company produced 400,000 pieces, but the standard cost per piece is 10,800. So we have this is around 4.32 billions. Yeah, 4.32 billions. If this is my standard total cost of the actual production, but I have my total cost variance of 72,000. But remember this 72,000, okay, it is 72 millions. This 72 millions, this is what I'm looking at. This 72 million, it's adverse. If my standard total cost for the actual production is 4.32 billions, and then the total cost variance is 72 millions but adverse. Do you know what it means? It means that your actual total cost for 2021 is the summation of the two. Because to get the cost variance, we are comparing the standard total cost and the actual total cost. So I'll add the two to come up with our total, to come up with the actual total cost for 2021. Being that this total cost variance, this is adverse, it means that the company incurred more than the standard. So what is our actual total cost for 2021? Because here in the question they said compared to the actual total cost for the year 2021. So meaning that the actual total cost for 2021, this is how much? 4.32 billions plus 72 millions, you get 4.392. Let me try to format. Yeah, we have 4 billions 392 million. That is the actual cost for 2021. They are incurring more than their standard because the cost variance is adverse. Adverse, remember I told you that when it comes to variances, if you see a variance with a capital A, it means that the company is overspending, most especially when it comes to the cost variances. So here the company overspent. There is an excess of 72 millions which they are incurring when you try to compare with the standard total cost of the actual production. So this is your actual total cost for 2021. But we have been told that in 2022, this is expected. The expected increase, that is 12.5%. So 12.5% times this This is the increase. So this 2021 plus the expected increase, you come up with 4,941,000,000. That is your budgeted total cost. Total costs for the year 2022. 7 max. Yeah. 7 max. 7 max. Yeah, so that is it. Those are your 7 max. Yeah, so that is your operating statement, and then part B, which shows the computation of the budgeted total cost for the year 2022. Discuss how variances are disposed of, then discuss how benchmarking is used to improve organizational performance. Now, how are variances disposed of? This question is also a common one. How variances are disposed of? Dispose of variances. This is C, Roman 1. Disposing of variances. Now, what do we mean by disposing of variances? Now, when these variances are computed, they have to be disposed of. But when we say disposing of variances, it means that they have to be transferred somewhere. So variances are disposed of by transferring them to the relevant accounts. Of course, the commonly used methods of disposition of these variances, the first method we have is transfer all the variances to the profit or loss. Transfer all the variances transfer all the variances to the profit and loss account. Now, under that method, the stock of work in progress, the stock of finished goods, and cost of sales are always maintained at the standard costs. Your stock of work in progress, the stock of finished goods, and the cost of sales are maintained at the standard costs, and the variances arising are transferred to the profit and loss account. Now, that is the first method when it comes to disposing of variances, that you can transfer all the variances to the profit and to the profit and loss account. Now, the second method, I don't know why my pen is misbehaving. The second method is you can distribute variances on a pro rata basis over the cost of sales. Distribute Okay, you're right. Distributing the variances on a pro rata basis over the cost of sales, work in progress, and finished goods stock using a suitable criteria. So you can just distribute the variances that have been computed. You distribute them to the cost of sales, work in progress, and then the finished goods stock by using a suitable criteria. Then you can write off the quantity variances to profit and loss account and spread the price variances over to the cost of sales, work in progress, as well as the finished goods, as well as the finished goods. Of course, we do that spreading of the price variances to the cost of sales and work in progress, as well as the finished goods, simply because these variances represent costs. So there will be a portion to the inventories, and then to the cost of what? And then to the cost of sales. So those are some of the common methods which can be used to dispose of variances. I've told you we transfer the variances to profit or loss. That is where you keep your stock of work in progress, finished goods, and cost of sales. You maintain them at the standard costs. Then the variances that arise are transferred to the profit and loss. Then number 2, distributing variances on a pro rata basis over the cost of sales, the work in progress, as well as the finished goods stock by using a suitable criteria. Then finally, you can write off the quantity variances to profit and loss account. Then you spread the price variances over to the cost of sales, work in progress, as well as the finished goods. There's another part which is all about benchmarking, how benchmarking is used to improve the organizational performance. When it comes to benchmarking, of course, it's a management process which involves comparison of the competences with the best practice, including comparisons beyond the organization's own industry. So sometimes you don't even only look at your own industry. You can try to go outside the industry, and then you try to make comparisons. Okay, you make comparisons with the key companies in those industries. Now, how is it used to improve organization performance? 3 marks. Of course, benchmarking comes with different advantages. But here now they're asking you, how can it be used to improve the organizational performance? Of course, when it comes to benchmarking, we can compare the aspects of performance with the best practitioners, meaning that we can observe our competitors, and then we see what they are doing. But as we are trying to benchmark, we are trying to identify ways how we can improve our profitability, how we can increase our productivity, and then how we can also improve on the quality. Okay, so you observe the current standards which you can adopt, but of course there is no way how you can observe these without observing what the competitors are doing. So one way how benchmarking can be used to improve performance is that we observe what competitors are doing. We try to compare the aspects of their performance with our performance. Then still, when it comes to benchmarking, we can use it to improve organizational performance because it helps to identify gaps in performance. And if we identify those gaps in performance, then we can develop effective actions plans which can help us to close those different gaps in performance. Then still benchmarking, we can use it to follow through with the implementation process. So we can use it to implement our ongoing work. Okay, we can use it to implement our ongoing work. So we can look at what is outside, and then we try to compare with our improvements that we are on. So at the end of the day, you find that this will improve performance, because the company is going to continuously strive to improve its performance standards in order to stay relevant in the market. So yeah, benchmarking can be used to improve organization performance. So we have to talk about the ways how it can be used to improve the performance of an organization. So that is it all for this question. It's about coming up with an operating statement, then also talk about how variances are disposed of, and then benchmarking. Thank you for watching. I've been your tutor, Senior Huntington. Bye-bye.